Hey everyone, Ken McKee here with Canopy Mortgage in Sacramento. Hey, today is September the 23rd, 2021, and the Fed just met Tuesday and Wednesday. Today is Thursday, and today the mortgage-backed security market and the mortgage market has blown up. Traders are freaking out. So what happened? Why? And what's next? How does it affect you? What should you do? Let's kind of talk about that. I'll try to be really brief, I promise, and without getting too deep into the weeds. Okay, so the Fed meets. Most people know that when the Fed meets, they raise or lower the Fed funds rate. Fed funds rate, you hear Fed raises rates, has nothing to do with with mortgages, like mortgage 30-year fixed or 15-year fixed mortgages. What it does, it affects the Fed funds rate, which is an overnight rate that banks borrow money from each other or from the federal government, and it's set by the government. So it affects credit cards, student loans, car payments, things like that, car loans. And so when the Fed raises the Fed funds rate, car loan pricing might go up, but not necessarily mortgage rates. Now, so they didn't do anything with the Fed funds rate. They left it alone. What they did is they said they were going to begin tapering the purchases of mortgage-backed securities. So most people don't know that since March of last year, the Fed has bought like $392 billion worth of mortgage-backed securities, and they're buying $40 billion a month. And so what they're doing by creating that artificial market or buying all those mortgage-backed securities, they're raising the price of the bond. Bonds, the yield on a bond is inverse to the price. So the higher the price, the lower the yield. So when you see a day like you see like this green candlestick right here, we started the day at the bottom, ended at the top. Bond pricing went up, which means the yield went down a little bit. So today we had a big old sell-off and we dropped 70 basis points, which means that the price of a mortgage today, say if you're doing a $500,000 loan, you pretty much are paying at the end of the day about $3,500 to get that particular rate, more than you would have paid in the morning. So maybe in the morning, whatever the percent was, I'm not saying this is what it was. I'm just going to throw a number out there like 2.99. 2.99 at the beginning of the day. At the end of the day, it was 2.99, but it cost you $3,500 to get that rate. So that's what happened today. Now, should we freak out? I don't think we should freak out. The reason why I don't think we should freak out is if you look at this bottom little area down here, this is what's called a stochastic indicator. So bottom line is that we're very oversold. When we go below this little red line, we're oversold. If you look back, like all the way back to pre-COVID, you can see every time we go below that line, we shoot up and you see rates the pricing gets better, which means rates go down. So every time we don't stay very oversold for very long, hardly ever. Right. And so we're very, very, very oversold. I would argue almost as bad as we have been. And we had a little area here in March when we were oversold around here, and then we had a little bump. So bottom line is that you can see, like, we are way up here on the page on the right-hand side. We have a little line. We're at 100.35. Before COVID, we were like 96. We were a full percent higher in rate, higher than we are now. So should you freak out? No. Rates are better than they were before COVID. Maybe they got worse by 1/8 to 1/4% today, but we're oversold. We should see some improvement. So if you're wondering whether you should buy or refinance, give me a call. If you're a realtor and you have clients that heard the Fed, whatever, and they're freaking out, give me a call. I'm happy to do a three-way call, talk them through it. I think we're going to see this sell-off is going to be an opportunity. I think we're going to bounce back, and we're probably going to see rates maybe gain by another by 1/4%, 1/8% better than we are now. It may take a little while, 5, 10, 15 days, whatever it may be. But is this a reason to freak out? I don't think so. If you have any questions or want to talk through it, give me a call, 916-871-7578. Take care. Bye.